I'm going to start a natural gas wheel with a $9.1 million of family money that I manage. And it's going to be basically free cash flow if done correctly and if things fall into place as they should. And if not, then, we just continue on to the next opportunity. So my whole plan will be to sell a short put, strike of $2, 71 days to expiration. I'm going to take profit at 50% of credit. And I'm going to use 3 contracts for every 100K in capital that I have. So specifically, the three contracts per 100K of capital is because each $1 move in natural gas is worth $10,000. So I'm kind of going for somewhat of a worst case scenario. If I end up buying natural gas for $2 and it drops to $1, it means I'm going to be down about $10,000 times 3, which is 30,000. Then obviously I'm going to collect some credit. So I'm probably going to be down about 25% on the entire 100K account. And this is the absolute, worst case black swan scenario. And I'm still going to be able to survive it. So this is why I chose the 3 contracts per 100K. Some people might go more, probably more, but I'm pretty conservative. I'm not looking for any home runs. The whole point is just kind of, to be able to profit before the price gets to $2. It might never get there. Obviously, it might reverse and go up, but at least I can profit a little bit. And if price goes to the $2, I'm gonna be able to first of all maybe roll out and down my short puts, and then maybe just buy the futures themselves while I still have my short puts profiting for me, and then sell calls against it. But if the puts are in the money at expiration and price moved incredibly quickly, then I'm going just to buy 3 natural gas futures contracts, which is basically the simple wheel strategy that that everyone is familiar with. And this is something I'm going to do probably tomorrow. So I'm making this video on Wednesday the 14th in the evening. So tomorrow I'm going to be slowly getting into this position throughout the morning. And obviously the goal here is to buy natural gas for relatively cheap and keep selling calls on it indefinitely. So historically, $2 for natural gas is a low price, which creates a very unique opportunity for us in this case. So this is what it would look like on the cycle I'm looking at, and we'll go over the option chain in a second. So the April expiration for natural gas, we have price currently is at $2.7. We just had a massive down day, about 5.5%. And this is where the $2 strike is located. So if you go to the history, so we can see that price kind of bottomed at 2.2 in May of 2020. This was one of the lowest prices in a very, very, very long time, right? So $2 is below that. So if we can get, it's really hard to tell of what might or might not happen, but ideally I want to be assigned at $2 or ideally I want to roll my put and then buy the $2 if it gets to the point, and then obviously we can just sell calls indefinitely and roll the calls up and out in time if they get challenged, which they probably will. But natural gas usually moves in cycles like really anything else, and it's a commodity, so it's actually will never go to zero. Because it's just too useful of a commodity for energy infrastructure, and so it's a super safe play, super unique opportunity that can be taken advantage of quite nicely. And if you look at the option chain, currently at strike 2, you can collect for 3 contracts. I go for 3 contracts. You can collect about $960 in credit, which is not too bad, and take profit at half of it. So will be about a 0.5% of profit on the account, which is, again, it's not the point. The point right now is we're waiting for the price to keep going down. If it happens, we have a really big upside, and we can make a lot of money based on that. But we'll see what's going to happen. These opportunities, you gotta wait for them, and even if price, might get to 2.3, 2.2, I might end up just kind of buying it instead of buying the future instead of waiting until it gets to 2, depending on what's going to happen with the fundamentals. Currently, the volatility is actually, it's a bit down, but again, this is a play that doesn't involve much volatility, so don't really care too much. But at the same time, I do want some okay volatility, which is what we have. It's not at the lowest of the range, not at the highest, somewhere in the middle, which is I'm okay with, because we are just planning to wheel this product over here. So we'll see what's going to happen. Really important to be able to keep the position size small, because if you over leverage, you are going to be done. So always gotta plan for worst case scenario, because it can happen. Not only it will happen, especially with commodities, especially something like natural gas. You have to be able to take the hit and have a plan for every single scenario. And it's only possible if you have a small position size to begin with, which is what obviously I plan to have. So this is it. I'll keep you posted. Probably will take me a while to get into this position. It's a pretty big position for myself, just because of the capital. But at the same time, I guess it's a drop in the ocean for how much money is actually going through natural gas on a daily basis. Thank you again. I'll keep you posted, and let's see if we can have a pretty good opportunity here. I will catch you in the next one.